So there's a clinical hat, which you go to dental school to learn how to do. But then there's a manager hat, which is what's happening operationally throughout the practice. Nobody teaches you about that generally. And then there's the owner hat, which also nobody teaches you about, but that really is probably one of the most important knowledge sets that dictates the financial success that you'll have as a practice owner. Welcome everyone to the Dental Associate Edge, where practice ownership isn't a dream, it's a destination. I'm Dave Striegel.
And I'm Sandy Baird. Together, we're consultants who work with dental practices every day, and we created this podcast to help dental associates and dental students build a clear path towards practice ownership.
So the last episode, episode 4, we posed a series of questions that we left with you to ponder and hopefully answer. Those revolved around answering what you needed to know before walking through the 3 practice opportunity doors. If you recall, door number 1 was a practice that's actually on the market currently. Door number 2 was the practice of a dentist who is approaching retirement, but the market is not being actively advertised yet. And then door number 3 is a practice that from the outside looking in looks outdated, looks perhaps needing some TLC, but still is a prime candidate where you have a dentist that's going to be looking to retire soon, but just has not been able to keep up on certainly the aesthetics of the practice, nor likely the operational elements around protocols, systems, maybe even technology, but that they're good bones. So those are the 3 doors that we have these questions revolving around. So I'll let Sandy take it to walk through the questions.
Okay. So question number 1, let me get this situation posed, because what you're doing is we're preparing you to talk to dentists who want to sell their practice. Whether you're going to talk one-on-one or you're going to talk in the email, phone, whatever, you need to have some answers to some questions that you have to clarify from the get-go. The most important thing you need to remember is the silver bullet to a successful purchase is setting clear expectations and communicating. Without being clear about expectations and communicating those effectively, it's going to be a nightmare of a purchase. So we're going to help you prepare for this. Do you expect to be mentored? A lot of associates and a lot of dentists who are selling, more so the dentists who are selling, would love to be able to mentor the new person who's going to buy their practice. They're very attached to their practice. They know the patients. It's something that's part of their soul. And they want to nurture you into that. But not every associate is open to that. And you need to make that clear from the get-go. If you're not interested in mentoring, you need to make that statement. You need to make sure that is clear from the get-go. And if your purchasing dentist wants to mentor, right there, you've got a conflict of expectations. And you've got to work through this. And the most important thing is first, to define what mentorship means. What the selling dentist and you consider mentorship may be 2 totally different things. Does it mean coaching meetings? Does it mean treatment planning, coordination, and sharing? How would you treatment plan this, doctor? Well, how would you treatment plan this, buying doctor? Is that what you're expecting? And you need to find out from the selling dentist, how long do you want to stay on? Once we purchase this, how long do you want to stay on? Do you want to stay on for 2 weeks, like my husband did? Or do you want to stay on for 2 years, that some of my clients did? And then you 2 need to discuss that. What are your expectations for this seller to stay on? And what are the seller's expectations? And another important thing, you need to know when he or she wants to sell. Is it next year? Is it 5 years from now? You need to get this up front and at the beginning, so you don't waste a lot of time for either one of you. And then the final important, very important thing you need to discuss right up top is confidentiality.
And I would like to jump in there real quick, Sandy, because the confidentiality elements of this are crucial because depending on where the selling doctor is in their process, and I have a client right now who's going through this, they have needed to keep the whole process confidential from their team because they're vetting potential buyers, and they've already been down the path a couple of times with interested buyers that the purchases didn't work out, and had the team gone through the emotional upheaval of thinking, okay, the practice is being sold. What does that mean for me? And all those types of things, that would really put the practice at a disadvantage. So don't be surprised if you're asked to sign what's called an NDA, a non-disclosure agreement, which effectively binds you to keeping it confidential and also limiting who you can share documentation with. So you may need to be prepared to provide a list of the advisors who you will be sharing information with as well. So it can run the gambit or vary as far as how stringent the NDA is, but don't be surprised if the selling doc has you sign one because they really want to keep it under wraps until you collectively agree to disclose.
Great points. And I was just reflecting back when Bruce and I sold his practice, how long we agonized over when to tell the team, when's the right time to tell the team. It's a very hard decision and it needs to be thought about carefully. Do not tell one team member and not the others. Don't do it. They will find out. And don't expect the team members to keep it confidential. It's impossible when you have team members because it's just going to get out. So it is a very hard decision and it will vary for each team and each seller and dentist.
And on that note, being on the associate side of the equation, it's going to be tempting to run situations or run information by friends and colleagues. And you'll need to be very careful about what you share because, as I think we've all experienced, the dental community is very small in even metropolitan areas. Dentists tend to know each other, information circulates, then you've got dental reps who are in and out of practices all the time. It's really a small community when it comes to information.
It can ruin a practice, actually. It really could. So you have to be very sensitive of that. Why don't you ask the next question, Derek?
So the next question is, are you energized by making owner-level decisions or drained by them? Among the questions that we encourage you to ask yourself is, can you multitask? Now, multitasking is an interesting concept because from the brain's perspective, you actually multi-switch.
Yes.
So can you handle, are you the type of person that can remain organized and track your thought processes and decision-making on multiple levels and multiple types of information? I like to think of it in the context of wearing different hats. So there's a clinical hat, which you go to dental school to learn how to do. But then there's a manager hat, which is what's happening operationally throughout the practice. Nobody teaches you about that generally. And then there's the owner hat, which also nobody teaches you about, but that really is probably one of the most important knowledge sets that dictates the financial success that you'll have as a practice owner. So it's being able to balance the demands that go along with wearing each of those hats, which are doable if you're able to stay organized and you have a good set of advisors.
Exactly. That's exactly right. Another question you need to ask yourself is, can you prioritize? You're going to be faced with lots of questions, lots of concerns, lots of financial decisions, lots of hiring decisions. When you're a business owner, your priorities have to change. Your first priority always has to be your patients. If your patients are not happy, you're not going to have a successful practice. And one of my favorite questions to answer is that if somebody asks me, hey, Sandy, from your point of view as a practice management consultant, what would you consider the silver bullet of practice success? And I say, oh, it's easy, simple. All you have to do is exceed your patient's expectations. That's it. That's all you have to do.
That's
easy
it?
to do. That's it. Easy to say, hard to do.
Sounds so easy, Sandy.
I know. So those patients have to come first. Your team has to come second. That will make your business healthy. If you put your personal expenses and your personal lifestyle first, you're going to get in terrible debt and you're going to be very frustrated and stressed out. So you have to be able to get the right priorities.
So prioritization, multitasking, that has to do with managing information and making decisions. Are you patient? Meaning, do you have the ability to delay gratification? Can you give people time? Can you give team members time to learn? Can you give yourself time to learn? What happens when you become the owner of a business is decisions become bigger, but timelines become longer. That requires you to be able to step out of the weeds and the emotion of what often can be a frustrating process and step up, onto the roof of your business, so to speak, and look into the future as really why you're doing all this. It'll test your patience, but as long as you have a clear vision and are clear as to why you're doing this, then you'll be able to navigate through virtually anything.
And the tendency as an associate is often, well, if this was my practice, I'd never do it this way. I would change this if I bought this practice. And the tendency is to want to do that. if you buy this practice that you're working in, the last thing you need to do is jump in with both feet and say, okay, this is what we're changing now. All right, everybody, this is it. We're changing this and this and this. That is the kiss of death. You're going to lose team members. You're going to create resentment. You're going to cause all kinds of problems. So when we say you need to be patient and be able to wait, as Dave said, it's going to take time, and you're not going to reach your financial potential overnight. You're not going to be able to buy that speedboat and that other house the first year you buy this practice. So you have to be able to wait for this to grow. You're nurturing this practice. You're growing this practice. It is a day-to-day process. It will come to you. It does if you're patient. If you're impatient, it will be more frustrating.
Yeah, you're going to experience a lot of heartache if you become impatient. And one of the areas that's hardest to be patient with is likely the management of your team, because you may see that there are certain team members who are not in alignment with you or your philosophy, and they end up, you feel like, being a barrier and making decisions or being obstinate with trying to get in line with what you're trying to do. And you may be right. However, every step you take with respect to gradually turning the ship, and it's like turning a cruise ship, not a speedboat.
That's right.
So often I think Sandy and I see it where people need to be clear on the decision they need to make first. So what to do? The second part to that is how. And you make a decision around a certain staff member who needs to go. That's the what. Decision's made. They just are never going to get in line with who I am, what I'd like to do, the way I'd like to do things. So I need them to move on. The question then becomes is how to make that happen so it affects the practice and patients the least. And that may have a different answer than I want it right now.
Mm-hmm.
The decision itself may be easy. The execution of the decision or the implementation of the decision may be a different timeline. And you have to be okay with both.
Exactly. And the last thing I want to emphasize here is you have got to learn to be flexible. I'm going to tell you right now, when you own a business, employees are going to come and they're going to leave. Employees are not going to stay with you the whole time. In fact, you'll be lucky to have an employee 5 years nowadays. Seriously.
That's true.
It's part of owning a business. You can't get all out of sorts and get yourself in a bind every time an employee comes in and says, I'm handing over my notice, doctor. Don't take it personally. I think it's fair for you to sit down and do the exit interview and say, what can we do better? To share with me why you're leaving so I can make sure this doesn't happen again. And engaged employees will be honest with you about that. It may have nothing to do with you, may have nothing to do with your practice, but you need to do that exit interview and find out what it does have to do, because you can learn from that. But don't get your feelings hurt. It's the way business works. Employees come and go. Patients come and go. You may see Mr. Smith in the grocery store or at church and think to yourself, oh, he hasn't been back for 2 or 3 years. He used to be a regular patient. What have I done? What have I done? That is the first thing you're going to think. You can't let yourself do it. You'll eat yourself up. In the middle of the night, you'll wake up and say to your wife, why isn't Mr. Smith coming anymore?
I thought they liked me.
That's exactly right. And I'm speaking from firsthand experience here. And patients' expectations change. The expectations that patients have from their dentist when we opened our practice in the 1980s and even in the early 2000s were totally different than what patients' expectations are now. A lot has to do with changes in technology, changes in techniques, changes in just the economic environment. And also, you've got to be flexible because your income is not predictable. It never will be predictable. It's going to vary from day to day, from week to week, to month to month. And you may average out very similar after a certain point. That's a normal business growth curve.
The more years you do it, the more you get a sense of, okay, the first quarter is like this, the second quarter is like this, the summer is like this, and you start to get the pulse of your practice and be able to make it a little more predictable. But that's why from a financial standpoint, Sandy and I always preach conservative approach to spending, especially at home to start. We want you to build buffer, build reserves, build room to breathe. That gives you peace of mind, number one, and choices, number two. I do want to add one thing to Sandy. You were talking about flexibility and the fact that team members come and go, and the transient nature of staffing today, which feels more so than 10 years ago, even certainly pre-COVID.
Yes.
It puts a premium on you being clear with your leadership philosophy, your vision for your practice, and not just in your own head, but being consistent with how you convey those things to your team verbally as well as in writing. It puts a premium on you being consistent with your approach to team building, your approach to meetings, your approach to protocols, your hygiene protocol, your perio protocol. All those things become easier to implement if you have them enumerated in writing, as opposed to in people's heads.
Exactly.
So when a longtime team member leaves, the risk is knowledge leaves with them.
Oh, exactly.
But if you have it written down, you have your systems outlined, this is what we do. Yeah, they may do it a little bit differently, or they may have some relationships that can't be replicated. That's fine. You hope they have great relationships. But today's leadership is different and requires more detail-oriented focus on having protocols outlined, having leadership approach outlined, so that anytime someone comes in, you can show them this is how we do things.
And that's what I spend most of my time doing. I mean, this is what I do.
Great
and
point.
I always love to say, operating systems they're recorded, they're trained, the team is trained on them, you discuss them, you design them, and they never give you a notice. They never say I'm leaving in 2 weeks. They're written down. They're there for you to revise, for you to review. But the biggest mistake dental practices make is when we get these systems designed and written and agreed upon, is they don't use them to train new employees. And that's where the real value comes in, is to use these systems, give them to the new employees so that knowledge will be passed on. I mean, that's such an important topic. I could go on for hours about that. But Dave, why don't you go to the last question that we had from last time?
The last question we had to do with how quickly or how soon do you want to become a sole owner or have full ownership? Because there are different pathways. There's gradual buy-in, which means that you become a partner with the existing owner for a period of time. And then through your structured agreement, you buy more and more a greater piece of the practice over a period of years, to the point where you might buy 25% when you join, and then another 25% in 3 years, and then the remaining 50% 3 years after that. This part of it is structured a lot of different ways. It really depends on what fits the selling doctor as well as you. You could be in the practice you're buying, which is a real advantage because you're effectively kicking the tires from inside, getting a sense of where the strengths and weaknesses are, what you're walking into, the personalities. That's really valuable, a valuable viewpoint. At the same time, there are some pros and cons to that. You being the associate for, let's say, 5 years before you buy in, now all of a sudden, is the team supposed to look at you like an owner when they've been looking at you like an associate for 5 years? That can be tricky. But with the appropriate preparation and making sure that everyone knows what's coming and how that's going to change and how the hierarchy of decision-making might change and things like that, then it can be done and navigated successfully. But it does need to be anticipated.
And my piece of advice here is, if you are an associate, do not sign up any agreement until you've worked in that practice for a year. You need to make sure. I can't tell you how many times I have witnessed this mistake happening. Oh yeah, you're coming in as associate, you're going to buy in, you sign off, and then after a year, you hate the dentist you're working with. It's not working out. Your kids aren't happy in school. You never know. You've got to give yourself at least a year to get to know the patients, the practice, what the patient expectations are, what the team, do you want to work with this team? So don't jump into anything. Don't sign the bottom line before you are really prepared. And that's the bottom line of everything we're talking about. Don't sign that bottom line until you have really been thorough in preparing for it.
So
Do you want to move on to episode 5?
I think so. I think we've done a really good job of kind of recapping episode 4, and now we're moving into episode 5. And these things are more informational than philosophical because it's pretty cut and dried in many respects, the financial preparations that go along with buying a practice. And it's, I think, simple to say, but more complex to navigate. But buying a practice is not just one transaction. It's a series of decisions that you have to make beginning multiple years in advance before you sign anything. And that's why we are big proponents, both Sandy and I are big proponents of you being an associate first, ideally in the practice you buy, but at least in a practice before you decide to become an owner.
That's where the edge, that is where the edge of associateship is in our minds.
So among the things that you need to prepare for when it comes to buying a practice is getting a loan. When it comes to getting a loan, there are multiple loan requirements that go along with that. And depending on which bank you end up doing business with, they may have subtle nuances on requirements as far as down payment, as far as reserves, et cetera. But we highly recommend that you meet with multiple bank representatives to get a sense of not just what their criteria are, but also who's going to be responsive and willing to work with you, because often, and Sandy, I'm sure you've seen it just like I have, there might be a unique aspect of a practice financially in the practice you want to buy that requires the bank's underwriting to find a workaround, or how can we compensate for that weakness, or how can we overcome this and still make the deal work versus it doesn't fit our box perfectly. So really getting to know the lending process, the loan requirements, how much savings you need to buy a practice, often 7 to 10% is what we see.
You've got to prove to that bank you're talking to, that banker you're talking to, that you are able to manage your money. And the proof they want is that you have saved approximately 7 to 10% of the buying price of the practice that you want to get a loan for. So you've got to start thinking about this long before the day you go talk to the banker, because if you go in there and say, I have $30,000 in my bank account, right there, you're going to be disqualified right there. You've got to think about this ahead of time. And you also have to be able to prove that you can produce about 80% of what the practice you're buying is producing. Now, as an associate, typically you're not going to produce as much as the owner, but you've got to prove that you can at least produce 80% of it, or around there, close to that. In other words,
and
production reports.
we also make a distinction between the practice you're buying, whether it's a solo doctor practice or whether it's a multi-doctor practice. If you think of it like from a banker's perspective, from the bank's side of the table, they want to make sure that the loan they've given you gets repaid. Do they really care if you do more of it or less of it, or if an associate does more or less? I don't know that they really care, as long as the money they lend you is repaid to them in the timeline that you've promised. But suffice it to say that one of the benefits of you associating somewhere before buying is you get to build up your treatment planning skills, your hand speed, your communication skills. I have a client right now who's looking for an associate, but not just an associate fresh out of school. Because of the pace that this practice operates at, there's an opportunity for an associate to step in and produce $6,000 to $10,000 a day from day one if they can handle it. But too many brand new dentists right out of school aren't ready for that. So you've got to make sure that you're a good fit for the practice you're buying. I like to think of it as kind of driving on a freeway. You know, which lane of the freeway are you comfortable driving in? The slow lane, the middle lane, or the passing lane?
That's right.
And each practice will have different lanes. So you have to understand that. And that goes to the due diligence process.
So the bank will want to see your production reports for at least the last year. 2 years is even better. And your procedural reports. What procedures can you do? If this is a big implant practice you're buying, how much experience have you had placing implants? And then they want to know, of course, how many years you've actually been wet hand practicing out of school. And they want 2 or 3 years of tax returns and W-2s. And then, of course, they're going to need lots of information from the other practice. They're very interested in the other practice, the bank is.
In the end, A good banker will walk you through a lot of this information, as will when we say that there's a team involved with helping you navigate this process, we mean it, because the banker is part of the equation, but the banker represents the bank. Now, your CPA represents you. Your transition consultant, if you have one, represents you. Their job is to make sure that you're buying what you think you're buying. That's what everyone's job is to make sure that this asset that you're purchasing is able to repeat what it's done with you as the owner. And if it can, then you have a chance of being very successful. So don't be surprised if the bank asks you questions around, why are you choosing to do this? Why this location? What about this practice? What is your growth plan? What do you see happening in the next 1 to 3 years? What procedures do you expect to add? So you need to have thought through, what is the current procedure mix and where do I see it growing? How will I use specialists? And so all these things are part of it. And it may seem overwhelming, but once you get the right people in place to help you, it really does fall into place.
Yeah. So approaching the bank, you've got to have reports. They're going to look at your credit score. They'll want to see over 700, how many years you've practiced, and they want to look at all the financial and all the information from the other practice. But you know what? They also want to hear your story. They want to hear how thoroughly you have thought through this decision, such as they may ask you, why do you think ownership is the best decision for you? What makes you think that you want to own a business? Why this particular practice? What is it about this practice? Why this location? And as Dave said, what's your plan for sustaining this production once you get in there? What's your growth plan? They want you to prove to them that you thought through all this and you really have done some research. And that's what we're trying to prepare you for, is this story. But I think this team that Dave was referring to, is, let's spend a little bit more time on that. I think there's specific roles in that team.
So as I already mentioned, you're a banker, and you need to interview multiple bankers. Think of it as different buckets. So banks like different buckets of loans. And depending on what their loan mix is on their balance sheet will dictate the type of loans they're looking for right now when you're looking. And they may have funded a loan for a friend of yours 6 months ago that you can't get now because their mix has changed. And so being in regular contact with 2 or 3 different bankers to get a sense of interest rates and terms. When we say interest rates, on the actual loan that you get, prepayment penalties. A lot of times when you take out a loan, the bank puts what's called a prepayment penalty in place for, let's say 3 years is pretty common, where if you repay the loan or pay the loan off within those first 3 years, then the bank collects a penalty for paying off early because they want their interest money. So these are things that an advisor, a good CPA, practice management advisor will help you understand, an attorney as well. So the banker is the source of the money. Then you have a broker often who might be helping you look for a practice or might be representing the seller. So it could be either way. You could have someone representing you, or there could be somebody representing the seller. But their job is to put the deal together. But you need to be clear on who they represent.
Exactly. Because if they represent the seller, which is often the case, they're going to want a higher price, want you to pay more, and they want it to be done quickly so they can move on to their next sale. Be really careful about when you work with a broker specifically, who is paying them. And you can work it out.
Who their client really is. And don't be afraid to ask. So who is your client?
And there is no reason why you can't have your own broker work.
Exactly right. Yep.
I advise it. Actually, I think that's an important thing. You can work with several brokers at one time.
Well, and this is an interesting question, not so much about the broker question, but what you reminded me of really has to do with the accountant and the attorney and even the practice management consultant. So let's say you're associating in a practice and the current owner, let's say that your owner, you get along great with, and they want to sell you their practice. Seems like a great idea. You still need your own advisor. You still need your own CPA and your own attorney. And I don't care how much you like who you're buying it from. If it were me, even if you are buying it from your parent, you still need your own representation because there may be topics that are uncomfortable for you and the seller to address that your advisors have no problem bringing up, duking it out if they have to and coming
Right.
to an agreement. And then it saves you and the seller from those uncomfortable conversations at bargaining tables that Sandy and I have been a part of.
Mhm.
And it can lead a relationship to really being effective. So
It
do
can.
yourself a favor and go in knowing that you want at least a CPA, if not also an attorney, and likely both, to review the financials and then the legal
Absolutely.
agreement, the contracts,
Absolutely.
without question. I
They
mean,
both do it because the attorney knows little about taxes and the
yep.
accountant does. But one word of warning, a mistake that so many dentists have made: do not hire a friend just because he's a CPA. Oh, I have a friend who's a CPA. No,
Or my
that
brother
is,
is a CPA.
yeah, no, this purchasing team has to have experience in the dental industry. You will get in so much trouble if you don't have that type of expertise.
And at the same time, Sandy, that's a great point. You don't want there to be any barriers between the
Right.
advisor telling you the truth.
And a friend or a family member, they're naturally going to be biased.
They are, and they're going to want to protect you in different ways that you think are a favor, but really may not be. So it doesn't matter who you buy it from. You need to have your own representation.
You do. And your banker will, when you take out the loan, they're probably going to require you to have some insurance too. So you need to have a banker, your brokers, accountant, attorney, an insurance agent, and then a practice management and transitional consultant, because there's nobody better who knows how to analyze the data. I mean, that's what we do. We analyze data from lots of practices. We analyze the operations. We know what best practices are for accounts receivables, salaries, operating systems, how the practice is really performing. Can you really grow this practice? This practice might be at its top production level due to restrictions to space or location.
Great point.
It is. If you think you're going to grow that and you don't know the facts, or you may buy a practice that has and this is not a lot, $200,000 outstanding accounts receivable for 90 days, at more than 90 days, and you're buying a patient base that thinks they don't have to pay. Talk about a battle.
Boy, isn't that a hornet's nest?
That is a hornet's nest. It is. So without having somebody who really is experienced looking at lots of different practices and knowing how practices work and how the operations should be performing, you can buy a real...
Well, it looks great on the outside, right? It's very shiny and nice, but when you get under the hood and start thinking, driving it a little bit and figure out how it runs, now it's not quite as smooth as you thought it was.
Exactly. And some practices, their real niche is, I'm just using a wild example, a certain religious identity or a certain ethnic identity. And these are hard to kind of break out of if you buy that kind of practice and you don't fit in to that particular niche. And I'm not saying that that's bad. I'm just saying that you need to be aware of that.
Well, that speaks to fit, in that there are different types of fit, based on geography and background, et cetera. So to your earlier point about being thorough and being clear with expectations and clear with the information, the more you can know exactly what you're buying, the easier you can make a decision on whether this becomes a practice that you can use as a platform to build your financial future.
And as an associate, you don't have the skills to do all this. You don't.
Not on your own. No.
Not on your own. And this is another part of owning a practice, is learning how to delegate certain things that is not in your toolkit. You're a dentist. You're an amazing dentist. But there are a lot of tools in there as a business owner you'll need that you don't have. And that's where you need to be able to say, okay, I had one dentist who tried to set up their own 401k from scratch and said, no. He was losing his mind as he was wasting so much time. You have to realize you make more money as a dentist practicing dentistry than any of these other people you're hiring. Just know that.
Yeah.
And always keep that in mind.
There are a few elements of just financial realities of ownership that we wanted to share with you. And Sandy, I know you're a big proponent of making sure that any new owner understands that they get paid last.
That's right. You know it as well as I do. It's a hard reality. My husband always loved to say he never got a paycheck. He didn't say it with glee either. I never.
He wasn't proud of that, huh?
No, he was not. I got a check. Everybody else got a check and a bonus.
Yeah.
He never. No, you get what's left over.
That's what's called profit. Yep.
But you don't get a check for it. You don't get a pay that's going to be dropped in your.
Well, and to the point that we're making here, it's not guaranteed. So
Right.
the paychecks of virtually everyone else in the practice are, for all practical purposes, guaranteed, even though we know under very rare circumstances they might not be. But for all practical purposes, the bank gets paid first, the team gets paid next, and then what's left over, the owner gets paid. And there are frequent times early on in a practice's life where there's no paycheck.
1 month you might not make any profit, but then
you need to be okay with that.
Yeah. I mean, the month that you pay your quarterly returns, if you haven't saved for them, you
Quarterly
may make
taxes, yep.
Yeah, your quarterly taxes. You may make negative money.
It's like quarterly taxes. Wait a minute, is that just once a year? Nobody told me about quarterly taxes.
No. Welcome
That's
to
why, again, a good CPA will help prepare you mentally. That's why, from a financial standpoint, we advocate strongly that you really are tight with your lifestyle expense to start with, so that you buy yourself the most room and flexibility for the first few years of practice life. And then you can get a handle on, all right, I'm getting a sense of what's predictable about my practice, what I can count on. And then I can start to loosen things up a little bit or pay myself a little bit more, etc. But really,
it's so tempting because you get paid every day. This is one of the perks of ownership. You get paid.
If you're basing your pay off your checkbook.
That's right. You're going to get money. You're going to be depositing money every day. And it will give you a false sense of security. You'll think, oh, look at all the money I have. Before you've paid all your overhead, before you've got 3 payrolls this month, before you have taken out anything.
So pause there for a second, Sandy, on the 3 payrolls.
Okay.
So that happens twice a year. 3 payrolls, you're chugging along. Every payroll is, let's say, $20,000. 20 first half of the month, 22nd half of the month, about 40. All right, you've got your mind wrapped around that. Then all of a sudden, it's 60.
That's right.
Now, wait a minute. Now I don't have money to pay myself. What just happened?
All that money you had in the bank.
Who's cheating me? Someone's cheating me.
Right. That's exactly right.
And depending on how you pay, which is biweekly, ends up being 2 months every year where you have a third payroll versus twice a month. You can manage that a little better. But these are things about the reality of cash flow and payroll and things that oftentimes you don't realize.
No, the cash flow can be very deceptive. So what we found worked is we set up a whole different bank account. Every month, we took out 20% of what we made and put it in this tax account because we learned very fast that
Uncle Sam comes knocking several times a year.
If you don't do that, you're going to have to borrow money to pay your taxes.
And you do not want to start that process.
So you need to get yourself disciplined and start from the beginning with this discipline. Is you're going to at least probably, hopefully be paying 20% of your taxes. I say hopefully because the more taxes you pay, the more money you've made. So don't complain about taxes.
The other thing, and Sandy mentioned it earlier, the need for insurance. You'll need various kinds. And it's not just to cover the practice or liability insurance or malpractice insurance. There are different types of insurance that can protect you against if an employee decides to bring a lawsuit against you, you can protect yourself there. One of the types of insurance that we often see younger doctors forego is disability insurance. And I've had clients who have relied on disability insurance for their livelihoods, and it was unexpected.
Of course.
And there are very specific and strict criteria for policies like that. Very, very important for you to have business operations insurance if there's a flood and the business can't operate. Have had clients who have had that happen. And
we had an ice storm and couldn't practice for 2 weeks, and we used our
business operations insurance.
Was it operations insurance? You don't know about that. Yeah. So No, insurance is really a reality of ownership. We've stressed the lifestyle expenses, how the reality of ownership is don't be deceived by what's in the bank. It's not your money, all of it.
That's right.
You may decide to set up a personal account, a tax account, and then your main account and feed things out so that you don't get deceived by that. And of course, you have to have from the get-go, you got to start planning for your retirement and savings. If you have a family, children, you want to be savings, buy a house or education for your kids. A financial advisor will help you on debt management, employee benefits. It's a team, and you'll work with some of these your entire practice. Our accountant, we started from day one, and we still work with them after it's been, from 81 to now. I mean, it can be a very long-term relationship. So they're instrumental. They're very important, but don't be bashful or feel like you are weak if you have to get these experts to help you. You're not weak. You're going to make a lot more money practice in dentistry. Why waste your time?
Exactly. You don't have to know everything, but you need to know who does.
Exactly.
And it's oftentimes not one person.
Really.
So let's finish up with some questions that we can leave the listeners with, Sandy.
Okay, sounds good. Let's start with number one. I think it's a good time to sit down and list 5 banks that you want to schedule an appointment with and discuss their specific requirements and recommendations for purchasing a practice. Start it now. And usually the larger the banks, the more they're used to handling these kind of debts. But don't get less than 3 quotes. You need that comparison. So start the relationship now. And so go ahead and list those 5 banks and set an appointment up and just go talk to them. Talk to them about, you've got to get all this. You've got to find out what they need. And you've got to also talk to them about your story up to this point. What is your story?
That's a great point, Sandy, that I want to shine a little bit of a light on is that the banking relationship, while there are criteria that are black and white, there are parts to it that will matter that you just have to have. But there's also a lot of gray. There's a lot of decisions they can make to help someone out and to maybe relax a certain requirement if you maximize something else. So starting this early, not coming in with your hair on fire saying, I need to
have a practice I want to buy right now.
I need money tomorrow. And showing them that you really are a planner. You think things through. You want to know what it takes and you want to know what their criteria are because you're going to be buying a practice and maybe not just one. You may buy one practice and then stack it on top of another someday or something like that. So there are multiple transactions that a banker will be looking for from you. And it's always nice to have somebody who you can call up by first name and say, hey, Sandy, here's the situation I've got. What do you think? What do I need to be looking at from a banking standpoint these days? So I think that's really important to highlight. The same thing goes for talking to and getting to know a dental specialized attorney, CPA, and transition consultant. Certainly the CPA and accountants are a must. And the transitional consultant can make the transaction and the process really go smoother and faster and help you be confident that you're not missing anything. So again, starting those relationships sooner can only help you because all of these people know other people and they know dentists and they may be your best ally with respect to introducing you to somebody.
Oh, they will be. Absolutely. And just make sure they have been working with dentists for years and working in the dental industry. So that's question number 2, to go ahead and research and interview, start these relationships now. And the final question is, if you haven't by now started talking to your spouse or your significant other or the family that will be affected by these decisions, start sharing this information with them. Start talking about what you're going to need to have saved, what kind of credit rating you're going to have to sustain. You know, how at first you're going to have to be very conservative. They need to know this all ahead of time too, because this is a partnership. Whatever you do will affect their lives and your family's lives and will affect their feelings as well. So I think it's really important, and we are going to have a specific podcast for your spouses and significant others or family members who want to hear about this. And basically, we want to hear from you. We want to hear from you. And so we've set up this website. It's dentalassociatesedge.com. there's a comment page in there that you can go to, and you can send us your questions. You can send us topics you want us to touch upon. You can ask us questions. We would love to hear from you. And I promise you, no question is stupid. If you have a question, I guarantee you 1 million people out there.
We've had to answer it at some point. Our greatest passion is just to be able to help prepare you for what can be the adventure of a lifetime.
Oh, absolutely. Well put, Dave.
So that's it today for episode number 5 of the Dental Associate Edge, where practice ownership isn't a dream, it's a destination. We thank you so much for attending with us. We'll see you next time.
And we would love to hear from you. Bye.